So smart money is making huge adjustments to their positions, and you absolutely want to be aware of where they're putting their capital in. Now, if you don't know, smart money is just large institutions, and the reason why you want to be aware of where these large institutions are putting capital in is simply because according to FINRA, institutions are estimated to account as much for 70% of stock trading volume. And so essentially institutions, the big money, that's what actually moves the markets. And so this is why on these public YouTube videos and also within the Push and Profit private group, I'm always often highlighting exactly where big money is parking their money at, right? And so in this video, we're gonna go ahead and talk about where I believe big money is putting capital in, and we're gonna go ahead and talk about a couple of reasons why. So make sure to watch this video in its entirety, and also don't forget to tap that like button if you found any value in today's video. Now, I want to go over some recent economic reports, as recently we had the US consumer sentiment come out and it soured in May, hitting its lowest reading in the last 6 months. And so this means that consumers and their sentiment around the economy, it's falling downwards. I mean, you see it coming down. And the reason why this is important and why big money is looking into this is because, of course, regular people are feeling the pressures in this economy as we had the federal funds rate extended at these high levels that we haven't had in quite a long time. And of course, that's done to stifle inflation. The Federal Reserve is doing this so that they could stop people from spending money and curve down inflation. But the problem is this is injecting a lot of pain into the consumer pocket. But one thing that we do know is that the Federal Reserve is looking to do rate cuts sometime in this year. Now, it started off with 6 or 7 rate cuts approximately, and now we're down to 1 to 3 rate cuts by a lot of analysts, ending for the year of 2024. And so the real debate is whether we're going to enter into a soft landing or a hard landing, or if it's going to be a crash. But regardless of what direction it goes, right, how bad it actually is, the reality is, look, consumers and people, regular people in our economy are feeling the pain. And historically, once the Federal Reserve starts cutting rates, well, that's when the bad stuff tends to happen, right? Because they don't cut it always, they never really cut it at the best time. They cut it after things are kind of crumbling apart. And so smart money is watching this, and they're positioning their capital in a strategic way. Now, historically, gold has been a store of value when there's uncertainty in the markets and when there's high inflation. And in fact, gold was actually one of the trade ideas that I shared earlier in this year within the Push and Profit private group, where we bought in and it rallied up tremendously. However, eventually we ended up seeing gold kind of just peak and consolidate. And for a while I said, okay, well, we took our profits within the Push and Profit private group. We're taking our eyes away from gold. However, now, I want to go ahead and reintroduce the idea of gold, as we're starting to see gold once again tick up. And this makes sense because, again, we know that essentially when there's uncertainty in the markets, we don't know if the Federal Reserve is going to cut after elections or before elections. There's a lot of uncertainty. There's geopolitical issues. And so we're likely to see gold rally once again. In fact, we take a look over here and we see that gold recently just jumped to its highest in the month as data signals a slowing economy, likely after these rate cuts. But it's not just the big players on Wall Street, it's also actually entire government entities that are absolutely buying up gold. In fact, we see that central banks have consistently been buying gold on an annual basis since 2010. However, within the last 2 years, that's been kind of amplified, and there's been a lot more buying within gold. And this isn't just our central bank, this is other governments as well, foreign governments. In fact, we see that China, because of the US dollar being so strong, China's central bank, among many others, are also loading up on gold. So essentially what we're seeing is a bunch of central banks rack up and load up on gold. But here's the kicker. Here's the very interesting thing. See, once we start to see the Federal Reserve start doing rate cuts, well, that means that the treasury yields will fall downwards. And so that means that the yields that you get from holding bonds are going to, fall down. And when that happens, that makes the opportunity cost of holding non-yielding assets like gold decrease, thus making gold much more appealing, especially because holding these bonds, you're not getting those high treasury yields that you once were. And so we're kind of in this primed area where we're likely to see smart money and these institutions start to basically do this and power into gold, right? We're basically in that area. But look, in all seriousness, I want to go ahead and also hop into my laptop and take a look at gold from a technical perspective as well, and just talk about a couple other topics as well. So make sure to, again, continue watching this video in its entirety. And if you have not done so already, by the way, make sure to tap that subscribe button so that you don't miss out on any future upload. And with that said, let's go ahead and hop into my laptop. Alrighty, so we are officially in my laptop taking a look at GLD, which is in gold ETF. And as I shared earlier, I want to go ahead and touch on gold from a technical perspective. Now, for those who are new to the channel, one of the things I often preach is that you want to synthesize multiple data points in order to get a better understanding of what's actually taking place in the directional move for a particular security. And so the reason why I say this is because oftentimes on YouTube or on X or any other individual that you follow, most of the time they only know how to do one type of analysis, which is technical analysis, looking at the charts. And although I do find value in looking at the charts, it's not the only data point out there. And I think it's much better when you use it in conjunction with everything else. And so we talked about how pretty much we're seeing a lot of buying taking place from central banks. And so now I want to go ahead and toggle over to the technical side of things, right? Because again, we don't want to discredit technical analysis. I know there's a lot of people who all they do is fill up the charts with a bunch of squiggly lines and try to make it seem like it's some complicated science. But at the end of the day, look, I want to go ahead and simplify it and just take a look at what's taking place. Now, gold is having a nice little momentum upwards. It's actually bouncing up. And although you see a red candle, I often say that red candles can be a bit deceptive when you're taking a look at a traditional Japanese candlestick chart. And the reason I say that is because naturally you think red is bad. But if we actually parse through a bit closer, we see that pretty much we actually close higher than the prior trading session. And so that's actually good. We're seeing gold move upwards. Now, of course, the reason why we see a red candle on a daily time frame is because we close slightly lower than what we opened for that particular trading session. And so that's why I often preach within the Push and Profit private group, and I also have several other videos stating that you should take a look at a chart from different types of charting styles. And so to get a better look at this, you may want to look at a line chart. As you can see, we're seeing gold push upwards, and we're actually getting close to the recent peaks that we just fell off from. Again, we talked about gold a while ago within the Push and Profit private group, and we had a nice great run up, and then gold kind of just dipped and paused for a little bit, but now it's kind of coming back into play. And so that's just kind of a line chart. I talked about that in a different video on how Charles Dow liked looking at line charts simply because it provides a nice cleaner look versus the traditional Japanese chart. But you could even toggle over to a hollow chart and you could see that it's green, right? So again, you want to switch the type of charts that you're looking at. Henkai, Ashi chart, whatever chart you're looking at, just go ahead and switch it over so you could kind of get a better understanding. And here you could clearly see gold is pushing up. Now, let's go ahead and go back to the traditional Japanese candlestick chart, which I know is a bit deceptive with this red candle, but now that we already dissected that this red candle doesn't really mean much as we are actually pushing upwards, something else I want to point out is that we're seeing that we actually are bouncing off from this area where there was a lot of volume relative to price. And so that means that around over here, there was some consolidation, and that's exactly what we saw. And now we're bouncing up into an area where there's little volume relative to price, meaning if there's buying pressure for gold, well, that would push gold upwards as there's not a lot of exchanging between both the buyers and sellers. And so that's going to help gold actually push upwards. Of course, inversely, if selling pressure were to come in, well, that would push gold downwards. But again, we're kind of bouncing up from this area where there's a lot of volume relative to price, and there was a lot of consolidation. And we see this red dotted line over here. That's the point of control. That's where there's a lot, pretty much this concentration of volume relative to price. And again, we are pushing upwards. Now, something else that I didn't really get to touch on a bit further, and this is also a potential other reason why we're seeing gold being bought up, is simply because if we actually take a look, right, and this is just gold futures, we're seeing gold futures is pretty much the same thing as what we were looking at. But again, we were looking at an ETF for gold. But one thing that is causing individuals to buy gold is worries about war, right? Of course, discord and mounting government debt has also fueled this worldwide rush by individuals and institutions, keyword institutions, into kind of buying gold. But again, we're having a lot of uncertainty with geopolitical issues taking place in the Middle East, and of course, with Russia and Ukraine. And so, of course, that's also another factor into this. And like I said earlier, you want to synthesize multiple different data points. Although I'm not a big fan of keeping up with geopolitical issues and what's going on, you have to factor that into your analysis. And so we're seeing several things kind of point towards more buying for gold. And so that's why I signaled within the Push and Profit private group that, look, we want to go ahead and actually look into taking a position with gold if you see value in it. Of course, you shouldn't take a trade unless you see value in it. You don't want to follow whatever some person says online, or maybe a fund manager. Again, these other fund managers and market pundits that you see on CNBC, they say absurd things all the time. Of course, most of the time they do it just so they could draw attention to their fund, but that's just a completely different story. But the point is, you shouldn't listen to anyone, including myself, and you should only trade or invest in whatever you see value in. I just wanted to point this out, that I personally see value in gold pushing up. Of course, I put this little and you can see it over here, this little bell, which is an alert, because I want to see if gold breaks out of its recent highs, because if it does, well, that's a great signal that gold is likely to continue rallying even further. And so with that said, hopefully there was some value you guys found in this video. Make sure to subscribe, by the way, if you haven't done so already. Check out the links in the description below to join the Push and Profit private group. But before you guys go, also consider checking out this next video right over here, where I talk about line charts a little bit deeper, and I'll see you guys on that next video. Take care, guys.